This is 3 stocks to buy in 2025 and never work again by our friend Tom Nash.
I'll show you 3 stocks on which I'm extremely bullish for the next 4 years, for the next 10 years under President Trump. And given the current tailwinds we have in the economy, you don't want to miss this. Hey folks, this is Tom Nash. And in this video, I'm going to do 2 things.
Tom, nice shirt and jacket. Dude, how did we end up matching like this? I definitely didn't look at the video and I was like, maybe I should wear exactly what Tom is just to make a gag out of it. I definitely didn't do that.
Number one, I'm going to explain to you what Trump is going to do to the stock market in his 4-year tenure. Will Trump be good or bad for the stock market? And also, I'll let you in on a little secret. I'll show you 3 stocks, which I'm very bullish on for the next 4 years under Trump. I'll tell you why. I'll give you all the explanations. Everything is coming up in this video. Now,
okay. So for context, this video came out January 21st of 2025. And what I wanted to do was go back to these videos from these different gurus that are about a month old and take a look at how their stocks have performed over the last month or so. So we're going to skip ahead. By the way, I noticed down here, thank you, other YouTube watchers. You did the hard part for me and you found out what those 3 stocks were. So the first one, Tesla. All right, let's see what he has to say about Tesla.
Now, as far as the price targets for Tesla for the next 5 years, I've updated my price target. My lowest bear case for Tesla for the next 5 years is $1,000, which means 135% from now.
Okay. All right. Let's go look at Tesla. So, like I say, for context, this was January 21st. Let's mark on the chart where January 21st was. All right. So, if we're going to be critical of this, we can say for sure this did have the 10 over the 20 price over the 50. The outlier trend template was set up bullishly on that point right there. Now, this order block probably hadn't showed up yet until a couple days later. Order blocks take a couple days to show up. But this one up here was definitely there for sure. So taking a look at it here, I could absolutely get behind being bullish Tesla at that point. I could definitely get behind being bullish at this point right here. So let's go ahead and circle it with like a green light right here, right? I could get on board with that for sure. But the issue, of course, is how these stocks are framed, right? The title is buy these 3 stocks in 2025 and never work again. Okay. Well, leading up to this point, we'll go specifically to this candle right here. And we'll go back from here. This jump over at this point right here. So let's say we went from here to here. Tesla was up 76% at that point. That's outstanding. That's really great. That is super, super great. But there comes an issue. Here comes an issue, of course. And that issue is, where's our risk at? For me personally, my trading plan would have me getting out at a close under the 10 EMA. And I've been calling that the red light now. And that would look right there. So for me, if I had taken Tom's advice and bought the stock on this date, this is where I'd be getting out. Lose a couple bucks, right? How much do I lose? 2%. That's part of the game. You'll make a buck, you lose a buck here and there. But if you're on the right side of the trends, you can ride them for a long, long, long way. Like I say, he didn't talk about risk. And of course, when you talk about stocks, remember this one thing. All stocks are bad. Every stock out there is bad. But every once in a while, it acts right. And during this period, Tesla acted right. No doubt about it. Tesla was definitely acting right. So we look here and we say, okay, remember, we don't have the Nancy Pelosi plan just yet in our charts. Maybe one day we'll be able to afford it, but we don't have that yet. So if we scroll over a little bit and we see what happened in Tesla, you know what happened in Tesla, but imagine you just bought Tesla right here. Let's say you bought it at 430. Let's say you bought it at 430 and you're watching it and you're like, oof, okay, this is getting kind of rough. But our friend Tom over here, he's like, listen, buy these 3 stocks in 2025 and I'm never going to have to work again. It's going down, and it's at 373. So, within the span of a couple of weeks, we're down 12%. Like, it's okay. It'll bounce back for sure. Let's double check this against the market cycle real quick, because I want to see the market cycle right here. I want to see the market cycle. So we're heading down this way. And we get to a little short-term bottom, and you're like, oh, praise Jesus. We hit a bottom. We're going back up. All right, Tom was right. But let's not discount the fact that it was down 24% before this little bottom right here. It bounced up about 9%. That'll definitely help you sleep a little better at night, because you probably haven't been sleeping at all. Probably put a big old position on thinking, you know what, Tom's never led me wrong. The next thing you know, there it goes. Here's the other thing, right? I really like to call above the 10 EMA, the green light, below the 10 EMA, the red light, right? So we had a green light here, red light here. Didn't actually close over with the moving averages, with the outlier trend template being bullish here. It turned bearish at this point right here. So this candle right here was the start of the bearish move. That was on February 3rd. Now, of course, he couldn't have predicted that. He couldn't have predicted that. And I'm not saying that he could have. But this is why you need to trade risk first, right? Because it went down, down, and down. And I'm not a Tesla hater. I own a Tesla Model Y Performance. And all the way down like this. And it's like, what just happened here? If we zoom out and we be very realistic, if we are very realistic, this right here is the market cycle. In the yellow is stage 1, and this is where it's consolidating before its big move. Stage 2 is the green box. This is the big move that everybody wants. This is the big move that every time you buy into a stock and it feels like, oh man, I'm a genius, because you're in stage 2. And that's awesome. Those are the times to be in. Stage 3 is when the moving averages start crossing over. How do we know that we get to stage 3? Well, first thing is that you'll see the first close under the 10 EMA was really when stage 3 started. Like it told you. It had a big old red light and it said, watch out, something ain't right here. And then stage 3 lasted from December 20th until, I would say, until February 3rd. So there was a lot of time right there, specifically during the time I made this video, where you could have got out and you said, you know what, this is looking like a topping pattern to me. I'm going to go ahead, I'm going to take my profits, I'm going to move on. But if you decided to hold, that's okay. But then you entered stage 4. Then you entered stage 4. And from the absolute peak to the bottom right here, it was down 54%. So those investors who held it down here watched it go all the way up and all the way back down. Tom actually is one of those. I know for sure that he owns Tesla stock. And I know for sure that he has held the Tesla stock. And I got to tell you, you can be a long-term investor. You can love a company. But if the stock is not acting right, there's no reason to hold it. There's absolutely no reason to hold it as it's going down. You could just use one moving average. You could use the 50-period moving average, right? You could go from here to here, right, close over the 50, first close under the 50, and still be up 60%. And then you wouldn't have this drawdown right here. Now, I know you're probably saying, but Chris, I don't want to have to pay taxes. If I sell, then I have to pay taxes. You're right. But I would much rather pay taxes on my 60% gain than watch all of the gain 100% disappear and we're back to zero just because I didn't want to pay taxes. Is there really any world where not paying taxes is a better outcome than not taking profits? I don't know where that world is. If you know where it is, put it in the chat. So let's move on to his next stock here. And like his price targets are crazy to me, but whatever. Tom does Tom. Next stock, Nvidia. So again, this is on January 21st. Let's go to Nvidia. And let me remove all my previous annotations here. Let's go to January 21st. This candle right here. Now, I could absolutely get behind being bullish right here. Absolutely. I see no reason not to be bullish. We had our 10, 20, 50 cross right there on that day. We had our green light come through with the close over the 10. And then a couple days later, you know what? Looked pretty good. But something changed. Something changed. I believe this was the DeepSeek announcement right here, right? 20% from top to bottom right there. Yikes. Here's the thing. When you see a close under the 10, I mean this, that means something has changed, right? And there were several closes under the 10 back here, the 10 being the blue line. But during a big run like this, there were no closes under the 10 EMA. Why is that? The 10 EMA is the indicator of your short-term trend. You could take a screenshot of this. The 10 EMA keeps you in on the short-term trend when it's working for you. And it gets you out before bad stuff starts to happen. So if we look here on this giant run that Nvidia had back in May of 2024, cross over all the way up. The first problematic day It literally closed under the 10 EMA by like pennies. By pennies. That was relative top right here. Now you'll never catch the actual top. So don't even try to do that. And anybody who tells you that they did that, they're lying to you. They're trying to say something here. Look, I try to make all of my free videos better than anybody's paid course. And if you have a way that we can improve these, tell me in the chat down below. But looking at this, right? The very first time that it closed under the 10 EMA told you something had changed. What happened after that point? It went sideways. This is 127 right here. 127. It went sideways, up, sideways, down, up, and look at it just bounce in the same area, right? It was down a little bit, it was up a little bit, but the trend, the overall bullish sentiment had gone. And this would be stage 3. This would be stage 3, this topping pattern that we talk about. Where's my slide? That's this right here. Now, is this starting stage 4? I don't know. Maybe, maybe not. But Nvidia, I mean, this is one where if you control your risk, right, with your 10 over the 20 price over the 50, you wait for the green light with the close over the green, it could absolutely pay bank. It could. It's not that deep, right? It's not that deep. It's not Tesla deep. I mean, this is awful. But Nvidia is not that bad just yet. It seems like it might have put in a little short-term bottom right here on the day I'm recording this. We'll have to see. So Nvidia, that was the second stop pick. Has not really performed since that point. And if we're going to retire in 2025, we got to see some things happen. And we can look over in his third stock, which is Palantir. This one is brutal. Now, I know Tom loves this stock. Right, we had this huge gap up after earnings. And let's go to January 21st. All right, on January 21st, this is so cool. You can go back to my videos. They're on YouTube. They are on YouTube. The receipts are there. I bet you on that date, I was also bullish Palantir. I bet you I was, because there was a lot of people asking about it. We actually have a green light right there. Actually, the day after. Your 10 crossed over the 20, prices over the 50, and you had a 10 price close over the 10 right there. And then, did it close under the 10? Nah. Let's go. Rocket ships higher. Right, Lambos, here we go, all day. Lambos all day, and then this close wasn't quite under the 10. It got really close, but it wasn't quite. However, this candle right here, absolutely, hands down, unequivocally, was your exit signal. This was the exit signal, no doubt whatsoever. And you can see from here to here, that was only a 38% gain in 20 days. That ain't bad at all. But taking the exit signals, keeping your risk in check, knowing where the red lights and green lights are, would have kept you from this, right? From it going down 20-something percent, right? Wouldn't you rather keep that 38% gain and not have 20% of it just evaporate? I know I would. I know I would too, for sure. So Tom's looking at a lot longer time horizon, but I'm trying to give you some perspective as to what's working today, how to tell when a trend is working in your favor, and also how to tell when a trend is over. Does this mean that it's the end all be all that you have to get out when that happens? No, not at all. But the way that I look at the market is that all stocks are bad, and every once in a while they act right. The Palantir absolutely acted right here. But to say that it will continue to act right as it's going down, like Tesla, it'll continue to act right? It'll continue to act right? Hope is not a strategy. And I don't want you to have to hope for anything. I want you to look at the market, tell where it is today, and then move forward. In fact, this is a quote from one of my mentors, Mark Minervini. He says, for those of you who ask me where the market will be in a year or at what level the S&P 500 will bottom, totally misunderstand what it takes to be a great trader. So Tom, my friend, I know you watch this channel. You should take heart at this, right? First off, all of your price targets, they don't mean anything. They don't mean anything, right? You can be as bullish or as bearish as you want to be on any stock out there on any day. I could throw a price target of Palantir of, I don't know, let's call it $815. Why not 10x from here? Why not 10x from here? This is a great idea, right? I love that idea. But my prediction does nothing to the market. And to Mark's point, I'm in the business of responding. I'm not in the business of prediction. Telling the future is impossible and unnecessary. Trading is a now business. And Mark considers himself a long-term investor, by the way. Trading is a now business, right? When you see something working and you get a green light and it runs and runs and runs and it goes up from here to here, runs up 51% in the span of 30 days, that's what you want to see. And you can avoid pullbacks like this, and you can use those as opportunities to get back in. You can always get back in. You can use these as opportunities to get back in for another 38% gain without having to put risk on the table. If this was useful to you, be sure that you like and subscribe, and make sure you come back tomorrow where I'll help you save time, make money, and start with less risk together as a team.
10 over 20 over 50.